Hello everyone, welcome to support and resistance. So first of all, what is support and resistance in terms of horizontal levels? And on this slide, we'll focus on actually what resistance is to start with. So resistance is simply a horizontal level where the stock moves up to and then rebounds back from. So the more times this happens, the more significant this level becomes. And this can happen on any time frame. This can be a daily time frame, 5-minute time frame, but obviously the higher time frames are going to have more significant levels of resistance. And here we've got AMD, which moved up, hit around 60 a few times before finally breaking through that resistance and moving up on a strong breakout. So when a stock is approaching a significant level of resistance, there's a lot of eyes on that stock. And if the stock finally is able to break through that point, that means accumulation has been strong enough to shake out the weak holders, overcome any short sellers at these levels, and likely there's institutional accumulation in here and an institutional kind of backing for this ensuing uptrend. So that is resistance, and this can also transition to support, which kind of the opposite of resistance is a point where the stock moves down to, pulls back to, and rebounds up from. And obviously there's just one point here where it bounces, but obviously if it pulls up, bounces, that solidifies this point, this former cup pivot, as a significant level of support. And support and resistance in general often happen at very significant price levels on the chart. So a previous all-time high, an earnings breakout close, significant levels that a lot of people are watching. And another key point here, if we do have a breakout, that horizontal level that was resistance can then transition to becoming support. So here we have a pivot/support retest, which often provides a pretty good low risk entry because you know quickly whether you're right or wrong. If this continues down through, you know that you're wrong at that time and you can keep your losses very, very short. So that is horizontal levels. And another way of kind of visualizing this is through volume shelves, because if you think about it, those significant levels are going to have a lot of trading going on, short sellers adding to their positions, people trying to buy the breakout. So these levels end up being high volume shelves as shown by the volume at price indicator here. So here we have Tesla during a 2019 run up, ultimate intermediate top, then a longer term base pattern here, consolidation, and then it really tightens up right along the spot around 160 or so, obviously post split. And there's a lot of trading going on, and then we finally break through that. It acts as support, and then we take off with a strong uptrend. And actually going back to the horizontal level for just a second, because I think this is a very key point here. This level, this price level, it's not exactly that level. It's that area, it's that general area. And a resistance level is not a resistance level until it's proven by price confirmation as the stock rebounds from or off of resistance or support. So this is just a general area. This point, A725, isn't in stone. Anything around that can act as resistance and support. As we get closer to that point, more people are going to become involved. But remember, it's that general area that we want to be focused on. So I think that's a really key point for people to remember. Stocks are allowed to oscillate back and forth above these key resistance support levels. They're allowed to undercut and reclaim these key levels. There's nothing written in stone that stocks have to obey to the penny these key horizontal levels. So moving on, let's talk about now dynamic support and resistance levels, moving averages. So often when you look at true market leaders of the past, you look at their charts, they'll seem to obey certain key moving averages like the 50-day, 10-week. And in this case, we've got CELH in 2020 obeying the 21-day moving average, drifting back into it, rallying above, drifting back into it, rallying above over and over again. And finally, its trend ends when it breaks through that key moving average and we start a longer term basing pattern. And I think that's another key point here. For instance, if you're trying to buy this breakout, you could have looked to the left here and noticed that the 21-day provides support right here and right here. So you could use that as your kind of backstop, as a trailing stop, or just add back off it at certain points along the way. And moving on, we've got another example, Roku in 2020, finding support at the 10-week, which is often a point of institutional support. You can see we have the key breakout and a drift sideways back into the 10-week, rally up, move down tight against this key moving average, And another thing to keep in mind is the price action as the stock moves back into that key moving average. We'll talk about that extensively later, but you want to see a drift down on lower volume, not sharp declines on high volume back into it. And you can see we rebound nicely here and trend nicely in 2020 for a very strong gain in just a few months, really. And moving on to Zoom, you can see it showed clear respect for the 50-day early on in its uptrend. It undercut it a little bit here, but rallied strongly off of it. And this 50-day MA, if your cost base is down here, kept you into the stock for the majority of this move. And finally here, we have a change in character where it breaks through it on above average volume. And you can see actually rallies back into the 50-day. It's rejected once, twice, and ultimately fails it once more right here. So another thing to keep in mind is you're looking out for changes in character where a stock that had been finding support at a particular moving average then loses it. That might be a sign to take profits on at least part of your position because it is a change in character and maybe institutions aren't supporting the stock as they were at that particular area of interest. So in terms of support and resistance, remember horizontal levels are placed at significant historical levels like all-time highs or cut pivots. And remember, these are areas of interest only. Stocks are allowed to undercut and reclaim them, but in general, you do want to see respect for these key levels. And finally, as I said, with Zoom, watch for changes in character. Look for stocks breaking key moving averages that they had previously respected. And on the flip side, if a stock finally rallies above a key moving average, that's significant as well. So that is support and resistance. And yeah, I'll see you guys in future videos.